Spera again. I hope you are all enjoying this tutorial class. So in the last video I made, we were on the history of accounting. That's what we stopped. So let me briefly finish it. In 1965, the Institute of Chartered Accountants of Nigeria was established. This icon of a thing is a very important professional body in Nigeria, and for my school, I'm expected or required to have attained that icon certificate. We will need to charter before we can even be allowed to graduate. Yeah, that's one of the necessary requirements to get before we can graduate. That's we accounting students. It's not for all commercial class. I guess also banking and finance, but I'm not sure. But I'm sure of accounting students. In my school, if you're an accounting student, you have to have chartered. Like, you need to get your icon certificate before you can graduate. So the other professional bodies include Institute of Chartered Accountant of Scotland. We have for England, we have for Ireland. Then we have Association of Chartered Accountants, like general. Then Institute of Cost Management Accounting. That's for cost accountants. Yeah, cost accounting. Then Association of Accounting Technicians. Like the way we write our icon, you need to write in Nigeria. You need to write ATS 1, ATS 2, ATS 3 before you write icon. I don't know if there are other exams. I guess there should be other exams to write. But from the knowledge I have, you need to write ATS 1, ATS 2, ATS 3. Then you write your icon. So then we have Association of National Accounting in Nigeria. So now let's go to accounting. I feel like I've said everything for the foundation of accounting. Bookkeeping is actually related to accounting. Okay, let me quickly give a brief. Bookkeeping is a systematic recording of transactions on a daily basis in the appropriate books. It is an integral part of accounting. Bookkeeping is less, how do I put it? Is less wide than accounting. Yes. Before you okay, the duration to be a bookkeeper is less. Why the duration to be an accountant is take you years. To be a professional accountant, it will take you less. And also, it is limited in scope. That was what I was trying to get here. It's actually limited in scope than accounting. Accounting is a very wide course, and before you can be a professional in it, it will take you years. As I said, do your ATS 1, ATS 2, ATS 3. I may not even be still need to keep reading as an accountant. Then it is task oriented. Like bookkeeping is, in accounting, you start with the books of account. That's the source documents, the postings, the preliminary, the primary aspects of postings. That's why they say it's task oriented. You can't determine your profit and your loss through bookkeeping. Yes, it is through accounting and the results posted. That's why it is said that accounting is result oriented, while bookkeeping is task oriented. You can't determine your profit and loss through bookkeeping, but you can through accounting. Yes, that is a very good differentiation between bookkeeping and accounting. Bookkeeping is the mechanical aspect of recording transactions, while accounting is selecting and interpreting of those stuff. Then, yes, that's bookkeeping actually. That's everything. So let's quickly go to accounting equation. Accounting equation is the fundamental framework of an entire financial accounting process. The whole accounting is based on this equation. Like I said, assets is equal to capital plus liability. That is the number one and the most important accounting equation. Assets is equal to capital plus liabilities. Assets are the properties or resources of the organizations which will be in use in order to provide more funds and profit making for the organization. It can be grouped into fixed assets and current assets. For the fixed assets, we have land and building, your machineries. Those are fixed assets. Assets that they are fixed in nature. They can last for a long period of time. That's it. We have land and building, we have fixtures and fittings, we have motor vehicle. You put them in use to make profit. They are in use, not and they depreciate. That's one feature. They depreciate. Your land No, land is the only thing that appreciates in nature. But motor vehicle to have depreciation. That's why sometimes we provide for depreciation in the profit and loss account and all those stuffs and the rest. So we have motorbike. Then for for current assets, we have cash in hand, cash at bank, stock, debtors. Debtors, people that owe you money. Like people that owe you money. So it's considered as an asset. Do you get? Like now, someone is owing me, I'm Mr. A, someone else is Mr. B. Mr. B is owing me money. So I consider Mr. B as an asset to my business because he's going to give me money. It is my resource. The money he's holding is my resource. It is what belongs to me. Stock are those goods. Like in manufacturing accounts now, we have opening stock, we have closing stock. So stocks, they are used in production. It's opening stock and closing stock into stocks. Then cash in hand, cash at bank, money you have in your hand, cash at bank, money in your account. So liabilities are obligations. I'm defining the accounting equations. I said asset is equal to capital plus liability. I've defined asset, now I'm defining liabilities. They are obligations to pay out money sometime in the future. It is an indebtedness of a firm. And liabilities include creditors. Like now, I said Mr. A. Let me use that same example. I'm Mr. A, he's Mr. B. If I am a debtor, the other person is automatically a creditor. Which means a creditor, let's say I'm a debtor now. Okay, let me use, I said Mr. B was owing me money. Which means Mr. B is if Mr. B is owing me money, he's a debtor to me. Why me? I am the creditor. I am the creditor in this aspect. If someone is owing me money, if Mr. B is owing me money, it automatically means I am the creditor. So if I am owing somebody money now, it means the other person. If I am owing someone money now, it means I am the debtor, while the other person is the creditor. Just get it known that a debtor is the person that is owing money, while the creditor is the person to which the money is being owed to. So it's the person I will pay the money to. So like in a business now, let's say Peras Organization Limited is owing money to let's use Mr. B Limited. It means Mr. B is my creditor. A creditor is someone you are going to give the money to, someone you have to pay. So it's a liability. I have a liability to pay to Mr. B, who is my creditor. In this case, I'm the debtor, so I have the obligation and the liability to pay money to Mr. B. I hope it's clear. Yeah. I hope I'm not confusing you guys. I hope I'm not confusing everyone. Sorry for the guys. I meant to use it. So, capital. Capital is the total money provided for the owner to start a business. Yes. The initial amount, the initial money you use to start your business is what is called capital. It can also be referred to as owner's equity. When you hear equity, you can also call it capital. The two sides of the equation must be equal. This also shows that every debit transaction has two aspects. So let's stop here for now, because that's like the primary aspect of the accounting equations. So assets are the properties or resources of a business organization, including premises, land and building, motorbike, fixtures and fittings, cash in hand, cash at bank, stock, and debtors. I said liabilities are the obligations to pay out money in the future. I'm a debtor, someone else is a creditor. If I'm a debtor, I'm the one owing the money. A creditor is the person to whom the money is being owed. You get? So that's it. I hope this class was beneficial. Thank you all and have a nice day.